Hello and welcome to our special edition of Indianomics. I am Lata Venkatesh. Well, joining us now to start this discussion on the sluggish growth trend is the Managing Director and CEO of Bank of Baroda, Mr. P S Jayakumar. Mr. Jayakumar, it's a momentous day with the GDP coming in very slow and the government before that announcing some large bank mergers. But first, the GDP question to you. The sluggishness is telling. What is your sense? Do you think the current quarter, the July-August quarter that you are seeing, already 2/3 is gone, is it showing any improvement?
I think rather than looking at it as this quarter, I think there are some clear, there are some clear positive things, trends. The interest rate is lower, banking system is going to have a higher level of liquidity and capital, the monsoon is good, the festival season comes up, and in general quarter one is generally a lower performing of the various quarters we have got. So I would say to you that yes, the GDP numbers have been much lower than what is been expected, but on the other hand, I don't see why we should give up so early. So I do think that there should be momentum picking up as we go into the next quarter.
You know, 4.9 is the real GVA and 5% is the real GDP. If you took the nominal GDP, that's come in at 8%. And as an industrialist was pointing out to me, no one's borrowing cost is below 8%. No company's borrowing cost. And if you're borrowing at 8% and growth in nominal terms is 8%, would not that be a disincentive?
Well, I think the interest rates have been coming down because we are now, the monetary policy, the reduction in the rates, and then the transmission process now getting better strengthened with the externally linked benchmark. Hopefully that starts playing itself out. And if a large amount of liquidity is there, then lending would start. But I think the real issue with respect to lending has also been the need for good quality credit proposals that would be there. And so we wait that as well.
Actually, that was going to be my next question, Mr. Jayakumar. Are you finding it difficult to find good credits? Is there demand at all for credit?
Well, there is demand for credit, but not at the pace it has been. And the demand is in some of the sectors like infrastructure, for example. Still there is some there's requirements coming along. But some of the other traditional growth areas have come off, like commercial vehicles and automobiles and so on. So as a consequence of which, the decline in some of the sectors is kind of outweighing the growth in the other sectors.
Fair point. Well, since we have you with us and a big merger or three other mergers have been announced, I must ask you, what is the secret for a merger coming through? What would be your advice to the various bank chiefs now who will have to go through the merger like you went through?
Well, they're all competent people and they clearly know what they need to do. But if I were to speak about a few points, I would say if we are early on able to establish how the combined institution would be better than the earlier institution, the sum of the parts, so to say, is better. Then I think the business purpose being established, there is something for everybody to rally around. Acceptance of what is best of the breed and employing them regardless of from where the idea came is critical. The employees of the larger institution being very, treating the others as equal becomes very critical. Meritocracy approach is important. And finally, there is communication to everybody. And in all of this, the government and the regulatory support and guidance has always been there. And that being the case, especially with capital support, with a variety of other inputs. So I think with the experience we have had, the experience that has been there with the SBI before us, and these institutions generally having got capital and NPS being lower and stronger and good management team with, I do think they will be able to pull it off.
Okay, well, just a couple of more quick questions. Do you think, the main reason for the merger has been their technology platform? FlexiCube is common for Syndicate and Canara. The TCS platform is common for Indian Bank and Allahabad Bank. You think that should have been the critical factor?
I would say to you that that might come out as a critical factor, but frankly there are other things that are complementary as well. If you look at Canara and Syndicate, the fact that they operate in a similar market gives them a in overriding market share in those economies as well. So it so happens that the technology platforms are also kind of coinciding in that way. So, well, the technology being common platform is important, but the other elements are equally important. And in this case, due to a confluence of events, it seems to be that it's working in multiple ways, not only technology, but complementarity of market, culture, etc.
A final question to you. The public sector banks have now been allowed to hire at market compensation rates a risk officer. Is that exactly the need of the hour, or do you think many more people should be hired at market compensation?
I would step a little back. If you were to look at it, one of the things that has been achieved in this set of reforms is a strong board governance process.
Yes.
If you go through that, and the fact that the management of the bank is accountable to the board in very clear terms is a very strong factor.
Okay.
And there is a lot of flexibility provided, compensation of non-executive directors or committee members, etc. So I think it's a structural reform, an element of which is essentially the way in which the board and the bank is going to be run. In it is a couple of things that we need more executive directors, 3 to 4, with somebody focused on technology and integration, and the chief risk officer.
Okay.
But truth be said, for example, in Bank of Baroda, we have been hiring people in the bank at market-based compensation for very specific roles. So this market-based compensation is not a new thing. Many banks have chief technology officers who are market-based. Some have chief financial officers who are there. I think there is an ability and a mechanism to do it, but it is kind of selective, and it's on critical roles.
Okay, thank you very much, Mr. Jayakumar, for joining me with your take on both the GDP and the big bank mergers that have been announced. Well, but the big story really is the way in which consumption